Last year in May, I turned $80 into about $3,400 trading gold in one night. Full margin, stacking sales, no stop loss. Flipping is real. It works, if done carefully. For about 3 weeks, I was studying gold very closely. London would consolidate, New York would manipulate liquidity, Asia would expand aggressively in one direction. That was mainly the move of every single day for that period of time. And that day looked to be following that same pattern. Now, let me show you exactly what I saw that day.
So this move started in a very, very interesting way. Like I told you, I was following gold for a while, and it was making the very same shape over like a period of about 3 weeks. So there is this thing. Now, depending on what strategy you trade, you might see it as something else. But yeah, let's proceed. For someone who trades market structure, they'll call this a change of character. Because of this market structure shift, price comes back to retest this zone, fib level of 50%. So price comes back and tests the fib level of 50%, and then comes back and you take profit at the swing low. That would be someone that trades market structure. Someone that trades price action would say, well, this is a shape that shows reversal. It's a reversal pattern. Call it a head and shoulder structure. So this is the head and this is the shoulders, and it's a bearish reversal setup. For an ICT trader, you'd look at this like the breaker block or the 2022 model of ICT. And how does it go? There's this liquidity sweep here. Basically, price comes here with this low, and then price sweeps the low. In ICT, there's something called SMT divergence. For example, if correlating pairs like gold and silver, if gold sweeps the high and then silver doesn't sweep the high and stops here, you can still take the trade. So that's what they call SMT divergence, but it doesn't even matter in this particular situation. So as long as there's this liquidity sweep, yeah, and after the liquidity sweep, price comes back down this low that created the liquidity sweep. Yeah, this here was the liquidity sweep. When price sweeps this liquidity, instead of continuing upwards, it comes back and closes below. Yeah, closes below the low that caused the liquidity sweep. And what do you call that? You call it a market structure shift. It means price has decided not to continue upwards and it is coming back to break this strong low, because a strong low, another benefit to you, a strong low is any low that creates a high. Yes, if a low fails to create a high, for example, if we're moving like this in an uptrend, if this next low fails to create a high and just stops here, then it's a weak low, and we expect it to be swept anytime. That's a weak low. So when a weak low is swept, there's no problem. You're still continuing in an uptrend. See what I mean? This here is a weak low. This one here is a weak low because it failed to create a high right away. So it can be swept and you still stay in an uptrend. But if a strong low like this one here, which created a high, if that strong low is swept, then chances are you're changing market structure or you're changing direction of the market. It's going to turn from like a bullish momentum to like a bearish momentum. That's what it means. And in this case, this is a strong low because it made a high. Now, if price comes back and closes below a strong low, it means it has decided I'm not moving up anymore, I'm moving down. So that's the thing about this structure that kept on appearing multiple times every single week on gold.
Full margin works as long as the price doesn't breathe against you. It's not consistent, especially when all the stars don't align. And it's normally so hard for every star to align in the market. So flipping shouldn't be a thing that you do consistently all the time as your main thing. It should be something you do once in a while as like a challenge. Like this time around, I'm going to try and do this and flip this thing, and you're really up to it. But the real evolution is shifting from acceleration to sustainability. Like you have to do something that's sustainable in the market. The more you survive in the market, the higher the chance of you getting rich with it, retiring your parents, if that's your dream, getting financial stability, financial freedom, things like that. For you to be able to reach that point, you have to be the kind of person that doesn't do a lot of these flipping and stuff like that all the time. Like your strategy has to be clean and geared to keep you alive in the market forever. Full margin is simply an acceleration tactic. If you do it once and it works, please don't do it again, or only do it if you can afford to do it again. But if you do it once and it works, use that money that you've earned to scale comfortably and calmly, not flipping one more time. So you might reach 60,000 USD from like say $100 and then you lose it all without even withdrawing anything. You get how weird that is. You'll cry. Survival bit screenshots always.
After the market structure shift has happened, for you to confirm, because like I told you, you're just believing that now price is going into a sell program. Yeah, it's going bearish. But for you to confirm the bearish move, price has to first come back and retest this zone, either the breaker block itself. Some people sell at this point because sometimes it will retest here and just keep going down instead of going deeper into like a fair value gap or something like an inverted fair value gap or inverse fair value gap or anything, any other PD array or point of interest up here. It might just stop here and retest the breaker block. This is what they call a breaker block. When price changes market structure, this order block becomes a breaker block. So it might tap here and just continue downwards, but most of the time you're safer to wait for it to retrace, because if you enter from here, you might enter a very deep drawdown and you might not have enough money, or you might have the money but your psychology might take a very big hit. You get, so yeah, most of the time it's safer to go up here. You might miss some trades, but it will be good for your mental health for the long term. Anyway, after price has broken down, you wait for it to come back and retest in a zone here, and then you sell downwards up to this as your target. Price has to first touch a high time frame point of interest or PD array, like a point of interest like a fair value gap or an inverted fair value gap or inverse fair value gap or an order block in the high time frame, or it has to sweep a high that is old from like the high time frame, like a previous daily high or low, something like that, or previous weekly high or low, or previous monthly high or low. Now here price clearly tapped into this fair value gap right here on the 1 hour time frame. See, and that's a bearish fair value gap. It's not bullish. This is my opportunity to go to the lower time frame and look for this shape. You get, and the lower time frame for 1 hour is normally 5 minutes, and you can also do it on the 15 minutes. I felt safer always on the 15 minutes. So you see here, price to close below that low, and then price closes below that low, we just come back and retest on this zone and then go down. Like I told you, some people enter right when price retests this order block or the point of the market structure shift, breaks it, comes back and retests the order block, which is now a breaker block, and then drops down. Yeah, either to this as you take profit just from here to here. But someone who is more like prudent or risk averse will wait and say, okay, let me wait for price to come and test this fair value gap here, this fair value gap right here, to retest it so that you enter, you get your entry. Oh, dropped. It's already in a huge bearish move, and you know gold was dripping very many pips downwards. If I count these pips from here, if you'd risked very little, even at 0.01, which is the minimum on gold, you'd get $58 from like 0.01 at any point. Meaning, if your broker allows you to trade gold at $10, you would have made $58 right away in like how long? In 15, 30, 1 hour, 45 minutes, you'd have made that money. That's how crazy gold was moving. And another thing that I used as a confluence at this point was supply and demand. Yeah. See? Things just went crazy. It first wicked upwards and scared me a bit, and I kid you not, I went into serious drawdown. Remember, I had only $80 on my account, but the few buys that I was getting from here saved me a lot. Yeah, they saved me from like losing the account. I think I reached a minimum of like less than $10 even at some point, but I was like, yeah, I'm not leaving this thing. So you can see from there up to there, yeah, all those pips. So I kept using 0.01 and I maxed it. Yeah, I maxed it like full margin. And remember, I was using a leverage of 1 to 2,000, and by the time we reached somewhere like here and I wasn't seeing any drawdown, I was closing the trades. I'd open them 0.01 and close them when they reached like $10, $13, something like that. Close all the 10, 20 trades, open new ones like that, close. And I reached a point and it's like, man, this move is going to die out. And here I started stacking 0.02, 0.05, 0. My goodness, I was like, man, I have to make this money. And here at the end, I was done. I was done with like stacking everything in just this simple move. Just this simple move. I had flipped $80, $80 to $3,400 in one night.
By around 6 a.m., the move was exhausted. The account was sitting at around $3,400. And here's the part that I'm actually proud of. I withdrew $3,000 immediately. The next night, I tried again. This time round, I flipped $400 to about 1,700. Every link is in my description here. If you want to check out my broker that I use, that I trust, that's HFM. They have a great deal for beginners and traders that have been doing this for a long time. I like the Shield 500 account, whereby you deposit and then the first deposit is refunded to your account if you lose it all. My Telegram link is also in the description. It's free of charge. Yeah, it's free of charge. Join it to see the setups that I take before I take them. That's all. See you in the next one.